So we're going to record this real quick. I want to go over the liquidity grab trader. We have news coming out at 8:30, so heads up on that. We're going to go over some setups here this morning. We're ready to go. So let's get rolling here this morning on the liquidity grab trader. Then we'll look at the news coming out at 8:30. We'll start looking for setups and start stalking setups this morning. So this is what we are wrapping for the for current members. It will be on the members download page. We will let you know when we're finished with that. I'm working with Gerald next week on that and this weekend to get this wrapped out to you guys. It's a simple download that will be on the members download page for you members. Okay, so we're going to have a two-part series here. We're going to have a number one, since we got news coming out here at 8:30. I'll just go over briefly what this liquidity grab trader is looking to do. It's a strategy. And then number two, tomorrow at 8:15, we're going to do another recorded conference call. I'm going to do playback since there's no news tomorrow. There's news today. I'm going to do a playback on how it trades, and we'll play back this week's trading, how it's did, and stuff like that, and we'll look at performance and etc. as far as that goes. So today I'll go over exactly what it does, and then you can replay that so you understand how it works. And then tomorrow at 8:15 we'll run a playback when there's no news coming out at 8:30. So let's take a look. What is the liquidity grab trader trying to do? So we know this is a V bottom that just happened in the S&P. This is the S&P live right now. This is a V bottom that just happened in the S&P. This is our yellow trigger bar that pulled us into the market a second ago. We'll look for trades like that this morning. So this is what happened right here. This is a pull-in. This is a pull-in, or called a V bottom with trend. We have a dual trend filter in the trade room, and if it's green, right here is our parallel trend filter, and this is our proprietary Renko bar type that we created. It's inside on the dots. And if it's green, we're looking for these yellow trigger bars to pull us in, or these entry bars to pull us in within 3 candles of this hammer. And if it comes within 3 candles, it starts right after the hammer. 1, 2, 3. It does. Then that is an entry. So the entry this morning was 63.75 was our last buy signal on the V bottom. And we've been high as 68.5 so far. So where liquidity grab trader comes into play is it looks for, and here's another V bottom down here. This is an entry buy. It looks to grab liquidity. So what the market likes to do, it likes to try to grab liquidity for continuation of trend. So you can see our dual trend filter. Let me explain this to you so you understand the liquidity grab trader a little bit better. So we've been in a hard uptrend. You can see our hard uptrend, our dual trend filter saying take buys only, no sells. We've had no sells at all with our program. It shows that these are buy signals. There's a V bottom with trend, yellow trigger candle fire there, and there's a buy. So you can see all the way up we've had a V bottom buy, V bottom buy, V bottom buy this morning at 2 a.m. and we had a V bottom buy at 5:15 this morning a.m. and we're looking for another V bottom to pull us up. We got news coming out here in about 9 minutes. So our dual trend filter is green. So if it's green, we got these parallel lines that come up. This has been back tested for over the last 30 years on the S&P to be the best zone with trend. It should reverse price and should show us the direction we need to buy or sell. If it's green, we're looking to buy. If it's red, we're looking to short. If it's green, we have a setup called a V bottom. This yellow trigger or entry candle will fire. Once it fires with green, if it's a buy signal, that's a buy signal there. Buy signal, buy signal, buy signal. Very simple. Not hard to understand. Very simple. Now let's look why, because this is about the liquidity grab trader. When does the liquidity grab trader want to fire? Well, after the V bottom, we want momentum come in the market, and we get these entry candles that come up, and this is called our Momo candle after a V bottom. This is called a Momo 1. So a Momo 1 occurs after you get a V bottom. So after a V bottom, a Momo 1 occurs. So where does this liquidity grab trader come into play? What it likes to do, it likes to spot when after a V bottom comes into the market in your green, it likes to spot this area between the V bottom and the Momo 1 where the market likes to catch the counter trend traders and tries to dip the market down to grab liquidity for a continuation. So it's going to look for a trade in between the normal V bottom that we'll look for all day today, and these traders talk about in the trade room in between this area. So if we look at it then, and then another V bottom will happen, a liquidity grab will happen between this V bottom and this level. So let's take a look at it. So if we look at the last liquidity grab, and let's take a look at this V bottom that just occurred this morning. Here's the V bottom that happened on the liquidity grab trader at 5:15.38. That coordinates with this hammer right there at 5:15.38. So you can see how they match up. 5:15.38, 5:15.38 is that hammer with trend. So this reversal, or what's called a V bottom, took place with trend. Where does the liquidity grab trader come into play? The liquidity grab trader, hey Russ, good morning. The liquidity grab trader comes into play when you get the first big dip where they take the counter trend traders out. Now we all know that counter trend trading, when I was a guest speaker in Las Vegas trade show, over 6,000 traders all over the world, I spoke to a lot of traders. I was actually a guest speaker out there, and a lot of traders counter trend trade, period. A lot of indicators, oscillators, trade rooms, they're built to counter trend trade the market, whether you trade against Fibonacci's, trying to sell a Fibonacci level, trying to sell a pivot level, trying to sell moving average crossover. Primarily, all indicators that are with all these different trading platforms, they're designed to counter trend trade the market. You know, the market's designed for you to lose, basically. So basically, if you're counter trend trading the market's designed for you to lose. Why? Because what the market likes to do, it likes to grab liquidity on the way up. So if I am looking at this chart like this, we want to stick with trend, right? So if I look at the last couple days, you should only be shorting this move down, and you should only be buying this move up. Green, red, red. Well, if you look at different oscillators and indicators, you're going to have a lot of buys and sells in between here. Buying this bottom, all these green counter trend trade pushes in the market, that's where counter trend traders get wiped out. They're always trying to catch a Fibonacci, like I said, catch a fib level. The MAC turns over, so some various indicator tells them to buy this low and try to buy low, sell high. Well, the market's not designed like that. What it tries to do, the market will come down. We'll have our dual trend filter that kicks in saying we're only shorting. We're looking to go against the counter trend trades, and we're looking to short these tops. So where liquidity grab trader comes in, it's going to spot these liquidity grabs in between these V bottoms and Momo 1s. So we'll go back to the current one that's in now. It's going to try and spot these. Oops. It's going to try and spot these by looking at the first dip right here, the first dip in price. Now what do I mean by that, the first dip in price? What it's going to do, it's going to look when you get a pullback in price against overall trend. So we're green, trend's up, we got a V bottom. The market closes at 58.64 on this previous candle, but then it dips all the way down to 60. So it dipped 16 ticks against trend. So those 16 ticks against trend, you're catching counter trend traders. What they're doing is they're countering the market. They're seeing this as a pivot level or resistance, or there's divergence, some crazy strategy saying it's going against the market, it's going down. Well, it's a way for them to grab liquidity, the smarter algos, to grab liquidity so they can bring it higher. Look at this big dip right here. Look at the big giant liquidity grab they did to bring it higher. So that's what liquidity grab means. Grab and liquidity, taking the counters out of the market and then bringing it higher. So what the liquidity grab trader, you'll notice, is there's a couple ways you can use it. Now we'll run a market replay on this tomorrow so you can see it, how it runs, and we'll do a video on that also. But I want to make 2 short videos on this just to show you how this thing works. Here's a V bottom. There's your first liquidity grab, gets long. There's your V bottom. First liquidity grab gets long. Here's your V bottom, which is the yellow trigger in our room, entry, and there's your V bottom, and there's your entry candle. So you can see what it does is there's your V bottom. Here's your first deep liquidity grab. It gets in right after the first deep liquidity grab. Now I'm going to show you how to do it for members in our future conference calls. You can, after a trend change, you can set it where you can only take the first liquidity grab, not multiple liquidity grabs. Where this one is set is taking every single liquidity grab after a V bottom. V bottom, liquidity grab. V bottom takes the first liquidity grab. Right? V bottom takes the first liquidity grab. So that's what it's designed to do. V bottom, first liquidity grab. Now I have it set to break even +1 after the first target, but you can toggle that off if you want, and you don't have to have break even +1, and you can set the targets. The targets can be 1 contract all the way up to 6 contracts. It does not have to be, you don't have to trade the big contract. You can trade the micros on this also. This works for the micros, which is 1/10 of the big contract. This works for all futures, all stocks, all currency, all crypto all markets, because it's showing when liquidity grabs are taking place in the market with overall trend direction. So if you notice when news is coming out right here at 8:30, notice there's news coming out right now. Notice there's no signals at all. There's no buy signals. Why? Because notice after these V bottoms, look at these V bottoms that are coming in. V bottom, V bottom, V bottom, because news just came out. And I would not trade this through news because it gets really fast with non-farm payrolls next week. You know, let it settle down 3 minutes after news, and then you can start looking to grab liquidity trades or V bottoms or Momo trades. We always let the news settle down for 3 minutes. But this goes to show you where it's not going to take trades that don't grab liquidity. If you notice when news just came out at 8:30, 8:30, right here, this in 1 second it did these type of bars. So you notice there's no entry. Why? Because there's no deep grab of liquidity. The market's still deciding what it's going to do. And it's waiting for a trend direction. So for this to take a trade right now, after the news just came out, and we'll run a replay on this, guys, for you guys tomorrow for this week, just to show you how it trades. But I just want to show you right now, for this to take a setup, it means a liquidity grab is simply a pullback in price against trend where the algos or what have you are trying to they're trying to pull back the price against the overall trend direction to grab liquidity, meaning with every buyer there's a seller, right, Terrence? So you need to have, if you don't have a buyer, you don't have a seller, you don't have a seller, you don't have a buyer. So if there's no, the market is supply and demand. This is easier to explain. It's supply and demand. If there's no sellers out there and there's only there's a big buy order that's coming in the market, the reason the big institutional money or the big algos, what have you, they can't just put 100 contracts at the market or 200 contracts. Why? It's supply and demand. They're going to have to meet price where there is supply and demand at that level. So if there's only demand, there's no supply, then guess what's going to happen? Instead of getting filled at 64 here, they're going to get filled these contracts at a much higher price because they have to fill the order. So they will find the what's called value in the price, meaning they're going to find the next level where price can get filled. So what they will try to do, instead of going in at all contracts, these algos, what have you, all contracts here at 58, 52, they'll keep doing these liquidity grabs to fill their orders in portions, right? Because what they're trying to do is they're trying to pull the market back against this overall trend. So if all overall trend is up like this, what they're going to try to do all the way up from here to here, Terrence, is they're going to try to pull the market back so they can get filled. Because if they do not, and they try to get in at, let's say, 100, 200 contracts or whatever they're trying to do, their fills are going to be terrible because it's got to go to the next available price based upon that supply and demand coming in the market, if that makes sense. So it's going to try to find the next level. What they try to do is they try to pull the market back against trend so they can get filled on their orders at a better price, right? So that's what's called liquidity grab trading, where they try to pull back the market against the overall trend of the hard trend. And once they do that, they can actually get into a better fill or better prices than putting everything in at once. Okay? Another thing what liquidity grab does, basically what it is stop hunting. What is stop hunting? Stop hunting is where they try to pull the market against the overall trend. So right here, we've been hard down, right there, hard down, right? October 23rd, you were shorting all the way down until 2:30 in the afternoon. No buys. According to our trend filter, you should have been taking shorts. If you look at the liquidity grab trader, only liquidity grab shorts, right? So what they do is they stop hunt. So stop hunt, it's a strategic entry is what they're doing. So they're trying to find a strategic entry. The smart algos is they're trying to find a strategic entry against when the market gets pushed against this overall trend. Okay? Because market structure is up, right? So if market structure is, let's say, down here, so we're down. Market structure is down, red, right? So the liquidity grab, in summation for you to understand in layman's terms, it's a stop hunt. They're going to take out the counter trend traders that's trading against this, let's say, trend zone, and wait till they come up, counter trend trade the market, and they're going to try to get in on that retracement to get a better fill or strategic, it's called a strategic entry in the market for continuation. So you'll see these order blocks, what they'll try to do is these order blocks, they're trying to buy these dips on these order blocks. So these order blocks, what I call order blocks right here on liquidity grabs, when you see this dip in price, like right now, we're looking for a V bottom. If we get a V bottom, the first dip in price, the liquidity grab trader is going to get long. A great way to look at it is look at our longer chart, the liquidity grab chart. If we take a look at our longer term liquidity grab chart, what have we been doing? We've been trending up since yesterday at 350. So it told you better not take any shorts if you want to go with the long-term trend up. Now let's take a look at where their strategic entries were in the market, the smart money or the smart algos. These are the levels where they pulled the market against trend on a smaller Renko size or smaller time frame, small minute charts, what have you, small tick charts, what have you, volume charts, whatever it is they're using. This is where they're grabbing liquidity. Now it's a liquidity grab like this morning, since this morning, October 24th. Notice liquidity grab, when they pull it back and it turns right back green. They just took all those counters out of the market. They made a strategic entry to pull the market back against trend and made a strategic, look how big they pulled this guy back. They pulled it back from 58.66 all the way down to the low of 58.58, almost 10 points. So they almost pulled it back 35 to 40 ticks against trend to grab liquidity, to take a strategic entry to buy when the counter trend traders are selling. So in order for us to know it's a liquidity grab, right here, you see this red candle? This red candle that's still ticking our longer Renko size? According to our trend filter, the trend is still up. So what are they trying to do right now? They're trying to take all these counters in the market, these counter trend traders, and they're trying to wipe them out on their smaller Renko sizes or smaller tick charts or smaller volume charts or minute charts. So all these counter trend traders that are seeing a moving average crossover, let's say, or there's divergence on a 233 tick, or there's divergence on a minute chart to sell. They're dipping this market down to try to grab liquidity. Now, your trend will change. Their strategic entries will change when you get a change in trend. So here, their strategic entries on liquidity grab trading and these order blocks on the way down, this is all red. So according to my methodology, how I educate, these are big liquidity grabs that are on the way down. We're trying to go with trend only. We want to go with this long trend down. You'll see traders in the room talk about it all the time. I'm going with a long-term trend down, long-term trend up. Because they know they've seen this happen over and over again, where the smart algos, they'll just pull the market back artificially on small short-term charts only for continuations. All right, so these are stop hunting. All right, they're taking out the stops, not of the trend traders. They're taking stops out of the counter trend traders. Why? This is trend down, right, Terrence? This is trend down. So think about this to get your head wrapped around this. This is trend down. So if this is trend down and these Renko bars are all red all the way down, who are they really taking out? Are they taking out trend traders? No. Why? Because the trend traders see that it's red all the way down. They know to only take shorts according to our methodology, right? Well, who are they taking out on these pullbacks? They're taking out the counters. So when this market gets pulled back like this, they're taking out counter trend traders because it's against overall trend. They're taking out counter trend traders against overall trend. So when you see these big, deep liquidity pullbacks, that's what they're doing. And that's what the liquidity grab trader does. Now, liquidity grab trader, you can use it on multiple time frames. It doesn't have to be off the smaller Renko. Now, this is a smaller Renko size. It's a 1/120. It's a 1/120 here. So, but let's just take a look at this. So if we look at this the last couple of days, what are they trying to do? Well, the reversal happened. Let's go back to yesterday. Let's go look at yesterday, all day yesterday. So all day yesterday, I'm just getting this down. So all day yesterday, let's take a look at it. And we'll look at it today. And look at the current trade we're looking for right now. So if you look at what happened, the market was getting marked down. There's only a couple phases in the market. The market's not very difficult to understand. Either it's going to go vertical or it's going to go sideways, meaning it's going to go vertical where you're trending, or it's going to chop, right, or go sideways. That's very simple. The market's very, very simple like that. We're going to go vertical or we're going to be in chop. All right. So what we have done is we've just come up with, let's stick with our trend filter. This outer edge trend filter, right, our zone trend filter that we tested for the last 30 years on the S&P, it will dictate what we do. If it's red, and we have another trend filter with our proprietary Renko bar type that we created, if it's red, we're selling only. If it's green, we're buying only. If it turns red-green, which I'll show you in a second, that's chop. We'll stay away from chop and wait for it to turn green again. So what you can do with the liquidity grab trader is that you can find the break of structure when structure is getting broke against trend to see where it closes back with trend, because that's what liquidity grab trading basically is. It's where it's called a structure break, meaning structure's broken. What do I mean by that? When structure's broken, if I'm green and I'm up, right? Let me get this up. So if I'm green, I'm trending up. When you get these pullbacks in price, that means structure of the overall trend is being broken to the other side. Doesn't mean it hasn't changed trend yet, but as far as the counter trend traders go, they think these little pullbacks like this, and here, and here, and here, is where structure's being broke. They're seeing, like I said, they're seeing a pullback in price, and they think it's going to be a trend change. They think it's a change in structure of the market. But what the smart money this is a smart money concept, what we're trying to do. we're trying to see where there's a distortion in price. So when there's a distortion in price, like right now, right, once this gets a V bottom and we get a deep pullback after a V bottom, so here's a V bottom, this is what's called a distortion in price. Price is distorted against the overall trend. And since there's a distortion in price, there's a sudden, sharp, massive pullback. This is a massive pullback. This is a massive pullback. This is a smaller Renko size, but you can see it on larger Renko sizes like this. So when it was trend was hard down and trend hard up, let's look at the massive pullbacks. These are massive pullbacks this morning. It happened at 7 o'clock this morning. This is a massive pullback from 66.5 down to 58, right? So they pulled that market back. That's a sudden pullback in price. Very, very big pullback in price. So this is a distortion in price against overall smart concept money pushing it higher. This is a big distortion in price. Big distortion in price. So they make this big, sharp, massive movement against trend in a short period when large trader buys or sells an asset. So what they're trying to do is these big algos and what have you, they're net buyers right here on these blocks right here, these order blocks. Net buyers, net buyer, net buyer, net buyer, net buyer. Even though you are seeing a distortion in price when it comes back, what they're doing is it's where the larger algos or what have you are pulling price against overall trend, right? So right now, they're pulling price against overall trend again on the larger Renko size. So this big red candle, they could be grabbing liquidity again. So as far as we are concerned, they're trying to grab liquidity still. They're trying to still grab liquidity to continue it up, to close it, to move it higher. That's how the market works with liquidity grabs. Okay? It's a pullback in price. These big tips on these candles, these big tips on these Renko, sorry, where they're trying to grab liquidity, they do a sudden sharp pullback where the vast number of orders are executed in a short period. So they're pulling this back and they're doing a massive pullback right here. It's a big giant pullback in a short period of time. So larger traders can buy or sell assets to continue it higher. And what we do, we know that, and we like to stick with trends. So if you're a trader yesterday in the trade room, from 10 o'clock to almost 3:50, you were a net seller. From yesterday, from 3:50 in the afternoon until now, you were a net buyer. So how does that translate into what we try to do? Well, it translates, the big trend was up, right? It translates, if we look at this all the way since 3:50 yesterday, on the big chart, 350 was right here. When the big chart switched over, our smaller Renko already switched over in the room. Our smaller Renko said green, green, bye, bye. So what have we done ever since 350 when it switched over in the longer trend chart? The longer and the shorter Renko have now aligned. Great V bottom, great V bottom, great V bottom, great V bottom. Right now, this is with news. You won't trade this with news right at 8:30:01. That's 1 second after news. Too fast. You won't trade that. You want to wait for 3 minutes after news. So what are we looking for now? We're looking for another V bottom, right? We're looking for the market to catch the counter trend traders, pull price back. So if you notice these red Renkos in here, all these red Renkos, those are counter trend traders. That's where the market's pulling itself back against trend, where the smart algos are pulling price back right, against trend to grab liquidity for this V bottom or liquidity grab to take it higher. And on the way down, it's the opposite. What's the smart money trying to do? All these green candles are counter trend traders. They're getting wiped out. Counter trend trader, counter trend trader, counter trend traders, counter trend traders, counter trend traders. All these greens are big stop outs where the smart algos are pulling price back against trend. And what are they doing? Down all day, right? So that's what the neat thing about this algorithm that we have. Now, if the algorithm is, since we have a dual trend filter, is green, red, when they're against each other, there's no trend. But when it's red, red, when you see our dots and our dots are red here and setting lower lows or lower highs, and our trend filter is setting, is still red, that's red, red, you got to love these V tops. It's a huge V top happened yesterday. Beautiful V top right there. Gorgeous, right? Market tanks. There's an entry 19, got as low as what? 01, 18 S&P point drop from our entry signal by going with trend, right? So now what is it going to look to do? The market's green right now, right? We got our outer zone that is trending up. Our dual trend filter says green. It's going to look for the first V bottom. After the first V bottom, it's going to look for what? It's going to look for a liquidity grab. Right now, it's taking no liquid. There's no liquidity grab with trend. Now here they did a deep pullback. Watch. This is a liquidity grab. They made a deep pullback, a distortion in price, right here. Now the algo would take it short is if it was with a what? If it's with trend, but the algo is not going to take it with the trend filter built into it. It's not going to take this against trend, but that is a liquidity grab. This is a distortion in price against trend. So the algo would get short on this candle. If you had the trend filter toggled off, it would get short right here at this candle. Because right now that's a liquidity grab. That's a distortion in price where they had a sudden rapid move against trend at that level, right? That's a liquidity grab. The reason the algo didn't take it because what? I have it set to only take with overall green trend direction right now, right? So it's only taking in direction of overall trend. Now, where liquidity grab will take place, I was trying to let this show you a trade when it comes up. It will have to wait for a V bottom. And after the V bottom, it will look for the first liquidity grab trade as far as that goes. Okay? And that's what we'll do. So we'll see if we can get a V bottom here first. And then we'll look for the first liquidity grab trade. And then I'll show you when this liquidity grab trader goes long. And like I said, sells are the opposite. So here's the V top. Here's our short yesterday at 12:30. There's your V top. There's your liquidity grab short, right? So here's your V top, and that looks for the first liquidity grab short. So here's our normal V top short. And what the liquidity grab does, what's neat about it is it's just confirming that they're grabbing liquidity. Because guess what? If they're not going to grab liquidity with trend, they're not going to try to drive it higher. So right now, you can see when the news came out here, we've had no buy signals on liquidity grabs. Why? They're not driving the price higher right now. They're not grabbing liquidity. They're not pulling price against overall trend at this point in time. But it will heat up, and you will see a drive in price. So think of it that way. It's stop hunts, okay? That's what it is. They're grabbing stops. They're grabbing stops against the overall counters in the market that counter against trend. And it's very easy to see with our trend filter. You can see what they do. I mean, our bias is very clear. It was shorts all day yesterday, and even right now, it's only buy side setup as far as right now. So what we're going to do, we're looking for a V bottom to come in. And if a V bottom don't come in, then if this turns red, we'll look to short the market. And then we'll look for the first pullback and look for a V top. And we'll look for the first liquidity grab trade. Don't make it any more difficult than that. If it's red, you're looking to short. If it's green, you're looking to buy. Let me pull this off just to clarify it. Watch. Very simple. Look how neat this is with our dual trend filter. We'll shut this off in a second, Gerald. So check this out. Very simple to understand. So we're red all the way down. Our outer zone's red, inner zone's red. We're shorting. V-top, beautiful V-top, right? But then what happens is this. This is our proprietary Renko bar that we created. It turned green-red. They're against each other. Now they're not agreeing. This is what's called a failure trade. Traders will talk about this in the trade room. They're like, failure trade coming up. What happens, since our outer zone has been back tested for over 30 years on the S&P to reverse price, if it starts breaking the outer edge on our zone, there's possible a trend change, and we call this a failure trade. And that failure trade is an entry at 15.5, and it went straight up to 43. Traders that trade this know that failure trades happen if we get outside the zone. Because if you notice, all the way down, we never closed outside that outer zone. Never broke that outer zone. For 30 years, this is the most accurate zone that we've tested to reverse price. Didn't break the outer zone. Didn't break the outer zone. Broke the outer zone here, so it started to turn green-red. This is called an outer edge trade setup. Outer edge, but once it broke, it alerted traders right here of this possible failure, which it did at what, 71.5 to 74.25, and then it went right into an outer edge trade with the overall trend because the trend was hard down yesterday on our larger Renko size. So that's a short right there. Our Renko size was down all day yesterday to only take shorts. At 69, got as low as what? 44. Got cranked pretty hard. My point is that when you are red, you are trending hard down. They're grabbing liquidity for shorts. They're reversing price to grab liquidity to get these V-tops. To get these V-tops. To get these V-tops. They want to take the counter trend traders' money out of the market to continue price to the upside. But once a trend filter goes from red and you're a net seller, and it goes from green-red, that's a transition phase. That's where the market's transitioning in. It goes from hard trend down to chop, which is when we look for a failure trade. Failures trade happen when the market's transitioning from trend to chop, back into trend. And it goes right back into trend, green. Right? Sometimes these will be longer than just a short duration like that. So we know today, going into trading, all day we've been green. V bottom. Now we're looking for another V bottom. We know not to look for a sell. We'll only look for a short if this happens. If our dual trend filter goes red-green. So if it turns red-green like this, and it's no longer green, and it turns like this, then we're going to change gears. We're going for a failure trade, and we're going to look for the first V-top, then the first liquidity grab. So as far as liquidity grab trader goes, it's not taking trades right now. Why? There's no liquidity grabs. Why? Because the market's not V-bottomed yet. You're going to look for your liquidity grab trades, guys and gals, after a V-bottom. Just make it as simple as that. You're going to look for the liquidity grab trades after a V-bottom. Now, before I shut this off, and we're going to run market replay on this tomorrow so you can watch it since there's no trades running here this morning. Afternoons has been pretty dormant. It's not grabbing liquidity because there's no trades to be taken because it's not taking trades because there's no trades to be taken. It's a chop market right here. So my point is that you will look for green or red. Red, short only. Sell liquidity grabs only. Green, buy liquidity grabs only. If it's red-green, that's chop, no liquidity grab trading. So what you can do is this. With this liquidity grab trader, a couple things. You can find a Renko size, just let it run by itself and try to grab liquidity grabs after the first with trend. Or you can even let the first V bottom or V top come in and then turn liquidity grab trader on. You'll have plenty of time of doing it on double clicking on it. So let's say you get a yellow trigger over here. Watch this. Here's what a lot of you will try to do this also if you want to let the liquidity grab trader manage your position. Some traders will find Renko sizes where they let this thing run while they're watching it. That's fine. Other traders will wait for the first yellow trigger to come up here. That trigger candle. They'll turn on the liquidity grab trader because they said, hey, that's a V bottom. We're supposed to have a liquidity grab in between the V bottom and the Momo, which it did. It got long right there, right? Like right now, if you're trying to let it manage your position, you let the V bottom come in and trigger you in, trigger the V bottom to confirm. It'd be a yellow trigger candle right after that. And then you can turn the liquidity grab trader on and let it manage your position. It'll have your stop in, your targets in. You can do it that way. Or right now, I have it set to trend only. You can take the liquidity grabs with trend only, and you can do that also if you want to do that also. The only time I would not run this liquidity grab trader, I would not run it in news. It can't keep up with the stops, right? Meaning if you have a breaking +1 and news comes out at 8:30, like non-farm payrolls, the price is it gyrates so much, it's going to shut the strategy down. You know, you can't trade it through news. So I educate traders, if you're going to trade this, wait for 3 minutes after news. 3 to 5 minutes. I turn it on after 3 minutes. It's up to you how you want to do that, to each its own. All right, so I would not run this thing through news though. Go to forexfactory.com. It shows all the red impact numbers to know when to turn this thing on, 8:30, the 10 o'clock news, or the Fed news at 2 o'clock in the afternoon. forexfactory.com. It's real nice. It lets you know all the impact numbers. So if you go to forexfactory.com, I'll know next week when to turn this thing on or off. Right? This is free. forexfactory.com. I use this, guys, for years and years and years and years and years and years. It tells me what the red impact numbers are. I don't care about yellow, or I'll run the strategy through a yellow impact number or an orange. But against the USD, you can put the filter over here. This looks like a little tornado. You put it against the red impact numbers, apply the filter. I'll run that right through those yellow and orange ones, never through red. Wait for 3 minutes. So today we had 8:30, we had news, right? At 9:45 today, we got news, the Fleisch manufacturing PMI. You want to wait for 3 minutes after that. Turn it on at 9:48 and try to catch some liquidity grab trades, right? You can do that. I know all the news happening next week right here. You can print this calendar out once a week. I know all the red impact news already that can affect this strategy. You don't want the strategy to turn off with news, because your stops are going to not be in place, right? So you don't want to run through news. So next week we got non-farm payrolls. The first week of the month is always non-farm payrolls, that Friday. That wait till price gyrates for the first 3 to 5 minutes, and then you can turn it on. But these are the red impact numbers you will not run this strategy through. Tuesday, 10 a.m., Wednesday, this is Eastern Standard Time, 8:15, 8:30 is GDP, that next Wednesday. And then we go right into Thursday news. We're just packed with news next week, right? These are the times you want to wait for 3 minutes, close it off 3 minutes before news, turn it off 3 minutes after news. Okay? Doesn't matter about how deep liquidity grab is, but the deeper the better, because you know that it is it's a big possible grab of these order blocks down there on these big giant Renko sizes. So a rule of thumb is this, Aaron. Aaron has a great question. When these V bottoms take place, I call them a zero turn candle. If a V bottom, it triggers right here on this first candle on this hammer, that's your best trade you're going to get on a V bottom. This is a 1, 2, 3. It's got to happen within 3 candles. Now watch this. So V bottoms So this V bottom has some power behind it. I'll show you why. This is a great time to turn on Liquidity Grab Trader. This V bottom has a lot of power. So there's our hammer. We're green. Let's look at the count real quick. There's candle 1, Orinco 1. The count starts right after the hammer, and there's 2. So if we look at it, the yellow trigger candle or the entry candle happened right after that hammer. So there's 1. Oh, move that over. The count starts right after the hammer. It's got to happen within 3 Rincos. Can't grab that sucker. It's got to happen within 3 Rincos. The yellow trigger is going to happen within 3 of the hammer, or we're not trading it. So you don't want to trade the Liquidity Grab Trader on unless it is within those 3 candles. Now, to answer your question, what's the best type of liquidity grab where the Liquidity Grab Trader can catch a big one? A big run for possible big runners. When? Here's your hammer. If you see that hammer turn yellow with trend, that's the time you should have a big liquidity grab coming up. If you see it coming in 1 candle, you should see the liquidity grabber trader have a big possible trade coming up. If you see within 2, you have less likely. 3, less likely of big liquidity grab. If it's 4 and after, we don't touch the Liquidity Grab Trader. Not a good time to use it. You're trying to grab liquidity when it turns within 3 candles of that hammer. This is 1 candle, there's your second candle. 1 candle, second candle. If you find ones that turn on the exact hammer or 1 after, you see some nice moves. Here's 1 candle. The trigger happened right after the hammer with trend. Red, yellow trigger sell, entry sell. That's candle number 1. Look at the move you get. Huge, massive drop in price, right? So you want to get the Liquidity Grab Trader grabbing the first liquidity grab right there in between that 19 to 15. So it's going to try to grab liquidity, get you short right in that level. All right, that's the best time to turn that sucker on and let it manage trades. Here again, another big drop in price. Here's a V top. Candle 1, candle 2. That's a valid trade. Turn Liquidity Grab Trader on. So you can see when the best one is. Here's a 0 turn candle. At the 0, turn Liquidity Grab Trader on. Got short right in there for the big drop. So you can see where the big ones can be, Aaron, to answer your question, based upon where does this yellow trigger form, right? Where's the yellow trigger form? So as of right now, this is a great teaching tool this morning. There's no liquidity grab. I mean, we have 3 this morning since midnight. There's no liquidity grab trading with trend because we haven't V-bottomed yet with trend. So since 8:30, it's only had 1 liquidity grab right there, but that's against trend. Now, can you take that? Yes, you can set the algo to take against trend also. It would have filled at 63 3/4, plus or minus a tick. Got down to 61 1/4 if you want to scalp the market. It will take counter trend liquidity grabs if you want them to. It's up to you, depending on the Rico size you want to use. This can be used on any Rico sizes. This can be used on a 5-minute chart. I'm going to run different Rico sizes for you. I'm going to even run a 5-minute chart for you tomorrow, grabbing liquidity on larger charts.